In this video, I'll explain what an accredited investor is and why it matters. First, let's define the term. An accredited investor is an individual or entity that meets certain financial criteria set by the Securities and Exchange Commission. The SEC regulates the securities industry to protect investors and promote market efficiency. And one way that it does this is by setting rules about who can invest in certain types of securities. To be considered an accredited investor, an individual must meet one of two criteria. The first is having a net worth of at least $1 million,
$1 million,
either alone or with a spouse. This net worth must exclude the value of their primary residence, but it can include things like investments, real estate, and personal property. The second criteria is having an income of at least $200,000 for the past 2 years or $300,000 combined with the spouse and a reasonable expectation of the same level of income in the current year. This income level must be demonstrated through tax returns or other financial documents. In addition to these two main ways, there are other, less common ways to qualify as an accredited investor. For example, certain entities such as banks, insurance companies, and trusts with assets in excess of $5 million are also considered accredited investors. Furthermore, individuals who hold certain professional certifications or licenses, such as a Series 7, 65, or 82 license, may also qualify as an accredited investor. However, it is important to note that simply having these certifications or licenses does not automatically make someone an accredited investor. So, why does this matter? Accredited investors are allowed to invest in certain types of securities that are not available to non-accredited investors. These securities are often more risky or complex than traditional investments and may require a higher level of financial sophistication to understand. By limiting access to these securities to accredited investors, the SEC aims to protect non-accredited investors from potential financial harm. If you meet the criteria to be an accredited investor, it's more important to do your due diligence and make informed investment decisions. In conclusion, an accredited investor is an individual entity that meets certain financial criteria set by the SEC. Accredited investors are allowed to invest in certain types of securities that are not available to non-accredited investors. If you like this video and want to see more content like this from us, make sure you hit that subscribe button, drop us a like on the video, and share a comment below. Thank you for watching, and we'll see you on the next video.